Hello, it's Blockchain here coming at you with another technical analysis update. For those of you just tuning in, I'm primarily an Elliott Wave trader using other areas of Confluence and other technical analysis to really complement my price analysis. So without further ado, let's go ahead and dive into the charts. All right. Good morning, good afternoon, good evening, good night, wherever you're at in the world. It is Blockchain coming at you with an ETH update. Of course, we're starting off on blockchaintatrading.com. If you're not familiar with my content or if you've not seen my site yet, make sure you guys do jump on. Number one biggest thing I want to highlight right here is my number one trading strategy that I'm giving away for free. All you need to do is click on this little get in touch button and I will send you a free video demonstration of our number one trading strategy that is consistent, profitable, reliable, and yes, it is applicable to any market. Stocks, crypto, does not matter. For those of you interested in Discord, you can do so right below it. $25 a month, you can give it a try, or $147 a year, which is actually half off the monthly rate. And then watch for a new masterclass to be launched probably within, I would say, probably still another 4 to 5 weeks out from that guy. But if you're interested in learning Elliott Wave, Crypto Hippo has his masterclass as well for $497. A lot of good content. Or if you're just simply starting off, a couple preferred vendors in which I would recommend, as I personally have used them myself. So make sure you guys jump on and check that out. Let's go over and just start and just take a quick look at the overall market here. Been obviously going pretty sideways for at least a week. It's been pretty boring to look at, unfortunately. It's pretty much the same thing today. Pretty much flat across the board, nothing too exciting to look at. Overall, same thing with news. It's kind of, one day it's bullish, one day it's bearish, one day it's bullish, one day it's bearish, from a, stocks and equity standpoint to, the crypto market. Pretty similar thing. So it looks like there's this overall a lot of indecision and not exactly a lot of persuasion from one way or the other. So kind of just changes day by day basis. So let's go ahead and just dive into the chart real quick, take a look at a couple different things. And let's see. Let's look at this one here. So it says actually a couple different ones laid on top of each other from a Gann box and a Gann square. It's these two guys that are overlaid on top of each other, and just a couple key points I want to point out. I'm going to look at more of a macro just with a weekly view or a weekly close coming in tomorrow, and not a ton of information just from a wave structure, even on a smaller standpoint, on a smaller time frame standpoint. So decent for a couple of scalp trades here and there for a couple $100, but nothing too exciting. But for those of you seen my TA, I've been looking at this overall as a pretty much a triple zigzag going up for a WXYXZ, or either that or we're looking at it potentially being an impulse wave. So for an impulse wave, we really would have had to start it here. Basically, this would be our 1, 2. Pretty much this whole thing right here would have been your third and the fourth, and then going up again higher for a fifth, which would put us back towards the 280. Then look a little off. Move that. All right, that looks a little bit better. All right, so I'll be looking at back towards roughly the 280 range, 280 back up towards the 290. With ETH, this would be an overextended 3. So we would possibly even get any over higher than that with an overextended 5, but we'd want to see the wave structure play out and see how it goes from there. The thing I don't like for ETH for this being an impulsive wave is that for this third wave, this would have to be a 1, 2, this would be your third, fourth, and a fifth. Again, it is possible, but this guy right here is what kind of makes it look a little wonky for me. So I mean, it doesn't exactly come across as clean as what I'd like it for an impulse wave. The other option, which is kind of the way that I'm leaning, is the WXYXZ, where this would be your W, your X, this be your Y, it's your X, and then this guy right here would be your Z. And if you measure it from a FID perspective, it's what's called a waterfall. Is where this obviously we have our 1-to-1, and then this we'd have our 618, and then actually, you know what? I would measure it like this. Yeah. All right. So that would be. This is what it would need to be in order for it to be the waterfall. But basically, we would have, an ABC, ABC. Even in here, this, 3-wave, and then right here, basically a zigzag for a 3-wave. So right here is where it'd be for a waterfall. We have our 1-to-1, and then right here is the 618, and then right here is the 382. I'll put those on real quick just so you can see what I'm talking about. So this one obviously is going to be your 1-to-1, but you can see right here so many lines. 618 matches pretty well, and then you take this guy right here. You see this move right here, the 382 is where I should put that back on the wick. Right there. So 382, you can see it matches up pretty clean. So that's what I'm talking about, the waterfall. We have a 1-to-1, 618, 382. That's the waterfall, which is, which is a WXYXZ is in order for that to play out. And then this right here, it was, would be more of a complex correction and, potentially another WXY that we would be going through and forming. But let's look at a couple of different key levels in regards to what would it need to be, what do we need to maintain in order for us to keep bullish, or what areas do we need to lose to look a little bit more on the bearish outcome. So overall on ETH, a couple key levels I'm just going to be looking for from a weekly close perspective is going to be right up in here. So the 236. And then about right here, 218, 220. Maybe even get that back up towards, 220, 221. So if we lose any one of these areas in regards to whether the resistance or support, that's going to give me a little bit more bias to, some upside or downside targets. We have yet to break outside of the outer fib circle from the Gann chart. We're also just really hugging this 45-degree line. If we do lose this, this has obviously been a huge play from the entire move up, where we bounced off it here, right here, right here, right here, and now we're on it again. So we could potentially, this looks somewhat similar to what it does right here, where we kind of hit it, wicked up, and then just came back down and retested it and then launched off. So right here is where, we kind of our decision time, in my opinion. So if we really lose the support of this 45-degree line, a couple targets that I would be looking for losing those. Some of the main ones I would be looking at first to come back and test would be really this guy here. Be looking at 213 for support, and then ultimately again the 190. I think we'd make a 200 stop back in here as well. So these would be the main areas that I would be looking for if we do lose and have it close below the 220 mark. Those would be the first areas. Overall, if this is going to be just a complex correction on its way up, ultimately I would start to look at major downside around 157 to 176. So I think we would take a couple bounces right in here, kind of see how we could react. If we get obviously 157, that's going to 100% invalidate this as an impulse wave. But we can come back down and still test the 170 mark and just have a pretty deep wave 4, and then continue on with a wave 5 up and still get us up towards those targets that we were looking at before. So that is still potentially a possibility. Obviously normally if we are pretty bullish for it to be a wave 4, we'd want to come down and hit the 382, the 236, which we already did. Next stop would be the 382, which would be roughly around that $200 mark right here. Would be the next area for potentially a wave 4 for us to look at potentially launching off of. So we still can have a dip down, find support, and then launch off. And normally, in this kind of scenario, the way that I would look at it would be more of like a potentially a swing fail, where either the bears try and push us down really quick with a pretty large move, and then the bulls buy up immediately, and then that just gives us the momentum to carry on to the upside, or vice versa, where we have a pretty strong pump and we start to break some of these key levels, and then all of a sudden the bears just come in with their massive bearishness, and then we just start swinging back down towards the lower lows. But we have continuously been making lower lows as we've been going through and just bouncing down on this pretty much in this channel right here for this descending channel. But getting to a point to where we've got to make a decision. We lose this 45, and then I think that's going to push us outside the 220 mark, in which I would start eyeing some of these targets and just looking for a wave structure to go down. If we do break up, first area of for some pretty heavy resistance is going to be that 250 mark. We'll probably have a little bit more, depending on the momentum that we have. We would probably have a little bit more up here, 240. Obviously, the 236 is going to be a big one for us to get over. So 236, 240 are going to be important ones for us to break before we get back above the upside. And then ultimately, I would like to, see us carry on. And for a wave 5, roughly 290. Let's see. Oops, wrong one. Let's get a trend based here. With an overextended 290 would be a big one, and then ultimately I think a wave 5 would end somewhere around the 310 mark. But if we do break 250, I'd say we're pretty much in clear skies for the most part to get back up towards the $290, $300 mark. Have a little bit of a resistance around the 275, but majority is going to be, pretty clear to get us up towards that 290, especially if we start, moving pretty heavy. So these are the near terms that I'm, really looking for. We got to break out of the 235 zone, the 220 zone. So it'll be interesting to see where we have this close. It's, we're kind of right here in the indecision zone. I haven't really been doing much. I've just, done a couple scalps here and there for $200, just playing off of Elliott Wave. But overall, nothing exciting at all. Unfortunately, it's like watching paint dry for some technical analysis for the standpoint at the same time. Where obviously I want to give you guys some content, some things that I'm looking at, and how I'm looking at a couple different things. But holistically, it's I'm trying to provide you guys with something beneficial and not give you something, at least the same thing over and over again, because honestly, there's not a ton to go over at the moment. So hopefully we'll see. Obviously, we're coming up on a couple time fractals here, so really the 21st, 24th is really the latest I'd like to see it. Which we would, personally, I would look for a pretty decent move, and breaks of these areas right here is what I'm going to be paying attention to. As I'm sure you guys have been watching a little bit, there's been a lot of just wicks back and forth where the bulls try and step in or the bears try and step in, and the opposing side steps right back in immediately, and we're right back where we were. So it's been kind of a slow bleed. Any kind of of the bigger moves have just been equaled out really quickly. So again, just kind of goes back to that indecision in regards to which way are we going to go. So we'll see, but this is the zone that we got to get out of first before we can start looking at something a little bit more exciting, unfortunately. So again, guys, if you like my content, make sure you guys smash the likes, hit that subscribe button, comment on the below, and hopefully I will see you guys in the Discord.